In today's issue, I will give you a systematic answer. I will share the practical combination of support resistance and breakthrough. It can help you find the best entry point and maximize profits. Today's content comes from my summary of practical experience. I believe that after reading it, your trading level will be significantly improved. A serious mistake that many traders often make is to only look at the direction and ignore the position. When I see the price rise, I want to do long, and when I see the price fall, I want to short. I completely ignore the importance of supporting the resistance level. As a result, I often buy at the ceiling and sell on the floor. The root of the problem is that they do not understand the direction and momentum of the market, which is essentially determined by the key position, that is, support and resistance. The relationship between support resistance and breakthrough is like a foundation and a high-rise building. Without solid support resistance as a foundation, the breakthrough will lose its meaning, and the market will be difficult to continue. Only when the support resistance is clear and firm, the ensuing breakthrough is more likely to start around a real trend. Therefore, combining and applying the truth is the core of gold trading and the key to making profits. Next, I will share 3 specific admission strategies. Strategy 1. Breakthrough entry method: high risk and high return. Radical strategy. This is the most direct, but also the most risky method. Specific operation: when the gold price strongly breaks through the important resistance level, enter and buy a bull immediately. When it falls below the important support level, enter and go short immediately. The stop loss is set on the other side of the breakout level, and the take profit is set to the next support, resistance level. Advantages: if the breakthrough is true, you can capture the largest initial profit margin. Disadvantages: it is easy to encounter fake breakthroughs, and the probability of triggering stop loss is high. Suitable for experienced traders who can strictly implement stop loss and can withstand high risks. Conditions of use: it must cooperate with real breakthrough signals, such as volume amplification. For example, after the gold price fluctuated for a long time around $4,500, with the increase in trading volume, the 4RK line entity stood above $4,500. At this time, you can do long at the breakout level. The stop loss is set at $4,480, and the take profit is $4,600. If successful, the profit is about $100. If it fails, the loss is about $20. Strategy 2. Step back entry method: risk-return balance. Stable strategy. This is my favorite method, which is more stable. Specific operation: after the price breaks through, don't be in a hurry to catch up, but wait patiently for it to step back to near the breakthrough level. Enter when there is a stabilization signal, such as long lower shadow line, bullish swallowing pattern. The stop loss is also set below the breakout level, and the take profit is at the next target level. Advantages: better admission cost, lower risk and higher success rate. Disadvantages: you may miss those markets that do not step back and run directly strongly. Suitable for traders who pursue stability, don't like to chase ups and downs, and have patience. Conditions of use: step back cannot effectively fall below the breakthrough level, and a clear stable K-line signal confirmation is required. Strategy 3. Confirm the admission method: low risk and low return. Conservative strategy. This is the safest and least stressful way. Specific operation: after the breakthrough, there is a clear confirmation signal of the price before entering. For example, the price has closed above the breakthrough level for several consecutive cycles, or has run for a distance in the direction of the breakthrough. The setting logic of stop loss and take profit is the same as above. Advantages: filtering false signals with the highest success rate. Disadvantages: the entry position is poor, and the profit margin is compressed. Suitable for traders who have low risk tolerance and pursue stability. The premise of applying these strategies is to find an effective support and resistance level. We offer 3 methods: historical high and low point method. The important highs and lows in the past are the areas where the capital gain is the most intense. Transaction intensive area method. The price range where the turnover continues to expand, and the support or resistance effect is stronger. Psychological threshold method, such as the integer threshold of $4,500 and $4,600 is the psychological consensus level of the market. As for how to set a stop loss and take profit, I adhere to a core principle. The stop loss must be set on the other side of the key support resistance level to leave buffer space for possible false breakthroughs. Take profit should look at the adjacent next key level. Be sure to ensure that the potential profit-taking space of each transaction is at least twice the potential loss stop-loss space, and maintain a good risk-return ratio. Finally, I want to talk about trading mentality and discipline, which are as important as technology. Overcome fear. Fear comes from uncertainty. Establish and trust your own trading system, and replace emotional decision-making with systematic rules. Practice from a small position, and truly accept the fact that loss is an inevitable cost of trading from the bottom of your heart, so that you can calmly execute stop loss. Maintain discipline. Discipline is the lifeline of traders. Make a detailed plan, including entry, exit, risk control, before trading. Strictly implement it like a robot during the transaction, and insist on reviewing and summarizing gains and losses after trading. Without discipline, no matter how good the technology is, it is difficult to realize. Facing consecutive losses, continuous losses is a compulsory course for every trader. Once it happens, the transaction should be stopped immediately to calm down. Then calmly review and analyze whether it is a system problem or running out of shape. When restarting trading, be sure to reduce the position significantly first, and wait for the confidence and rhythm to recover before gradually adjusting back. Well, that's all for today. We systematically explained the combined application of support resistance and breakthrough. It covered the multi-dimensional content from technical strategy to mentality management. I hope that these practical experiences can effectively help you improve your trading level and move towards a stable profit. If you think the content of this issue is helpful to you, please pay attention to the support.ce next time. I look forward to seeing your progress and growth. Come on, fellow traders on the road. I wish everyone can break through the bottleneck as soon as possible and walk out on their own path of success.